talk about the new Intra-Africa Trade Agreement, or AFCFTA, which is one huge piece of work with many moving parts. And one important part of the trade agreement relates to financial services of banks and the payment systems. The president of the Africa Export-Import Bank, Dr. Benedict Orama, says some 400 banks across the continent are already on board the new trade deal and are expected to increase that to 500 with a total of $8 billion in trade financing capabilities. So the question is, are Nigerian banks prepared to be part of this game-changing AFCFTA? My guest on this tonight is Dr. Bunmi Bajomo. She is the group head in charge of corporate bank manufacturing at First Bank of Nigeria. Good evening, madam. It's good to have you on the show. Thank you very much for coming. So let's get your expectations of the new AFCFTA in terms of the performance that you think will be able to deliver in the short to medium term.
Thank you very much. As has been said, the African Continental Free Trade Agreement represents a new dawn for Africa, a progressive dawn, the dawn of a unified economic bloc that is expected to deliver a lot of positive in terms of reduction in poverty, increase in economic growth for a GDP of about 1.3, for a GDP connecting people of about 1.3 billion people, delivering GDP of about 3.4 trillion. But all of this will remain an aspiration if all of the parameters that are expected to bring those policies to be are not implemented. If you look at the policy, a major aspect of that policy is one, tariff, but tariff by itself will not deliver significant gain. Why? Because a lot of African countries currently do not trade amongst themselves. Trade amongst African countries only constitutes about 15% of the total trade wallet of about $84 billion. But if you look at the non-tariff barriers and the trade facilitation arrangement, that is where the meat is. The trade facilitation arrangement, along with the non-trade barriers, are expected to deliver growth in revenue that are significant. But in terms of my expectation, all of those non-tariff measures are captured under the first pillar of the African Continental Free Trade Agreement. What are those pillars? The first protocol is the Protocol on Trade Access, which deals with two critical issues. One is the issue around qualifying goods and services for tariff liberalization or relaxation of tariff. The second, which is also critical, is the policy around country of origin. The objective of the policy around country of origin is to avoid a situation where goods from outside of the continent or from the trade bloc are smuggled in due to our porous borders, porous exchange control, porous ports control measures, and they start qualifying as Africa. So what this protocol deals with is to lay out the process, but as of today, that has not been fully ratified. So determination of that, along with the second protocol, which is the protocol on dispute resolution. I can tell you, Botsin, a lot of disputes will arise from this Continental Free Trade Agreement, because even before now, there's a lot of protectionism in Africa, duplicity of policy, language duplicity, and very divergent, heterogeneous economies.
Yes, I want us to quickly touch on the financial services sector. Okay. The AFCFTA is expected to liberalize this sector further. So what are your thoughts on this? Okay,
great. The market access provided under this agreement for the financial sector, under the third protocol, it was a protocol that was supposed to liberalize the service sector. A key component of that is that 5 sectors will be liberalized. The major one under that is financial services. The second is professional, business services, tourism, and travels. But for financial service sector, this offers an unprecedented platform, first in terms of unrestricted access to this market that I have so defined, and the opportunity to finance trade across these economic blocks that either had not been available, and to do them on a big-time basis. And how do we hope to do them? Before now, you will have looked to outside of the region, look at the international community, look at the banks that are existing in Europe and North America. But now you have the opportunity to partner with Pan-African banks without leaving the continent. That has implications for the transaction cost associated with big-ticket deals. Also, before now, in order to lend credibility to our offering, we would have had to look for global lead arrangers, global financial advisors, all of who would have dictated their prices. Given the opportunity presented by Pan-African partnership, it means that a lot of those global lead arrangers will come under pressure. Also, in terms of the risk rating, before now, if you look at Nigeria on its own, you might have a bit of nervousness, or you look at Gambia, or you look at other African countries. There is advantage in numbers. This is a block. The risk rating of the entire block would increase, and that will lower the cost of sourcing even for funds on the international scale.
So I think my next question would be, how prepared you financial services practitioners are? But let's talk about that when we come back. Dr. Bajomo, stand by. We'll appreciate your time. Let's be back in two. So, how prepared are Nigeria's financial services practitioners, like banks, for the new deal? Dr. Bunmi Bajomo of First Bank is still here to answer a few more questions on this very important milestone in Africa's trade history. Thank you, madam. That's the question. How prepared are you?
To me, I would say the Nigerian banking industry is actually well prepared. As you know, following the global financial crisis in 2008 to 2009, significant banking reform has been taking place in Nigeria. And so if you look at Nigerian banks now, Nigerian banks are actually adequately well capitalized. If you look at the capital adequacy ratio, that is well in excess of 50. In fact, for SIBs, is actually 16%. That gives them the impetus to undertake significant transactions in whichever part of Africa they're so determined to do. And then secondly, also, the industry is already Basel II compliant. That is a more stringent risk management measure than the Basel I. That gives us a leverage over the rest of Africa. Also, post the financial crisis, the risk management and regulatory architecture in Nigeria had been strengthened. So banks now have significant corporate governance structure that gives them the pedigree and footprint to operate in any part of the world, as the case might be. Also, in terms of cross-breed of knowledge, technological transfer, and especially our digital footprint and payment system, we're able to now upscale that to other regions in Africa, and where, especially in things like wallet money or yes, all of those, we can also leverage whatever is present in Southern and Eastern Africa and see how we can deploy them, especially given our infrastructure constraints. So I say this presents a significant opportunity for Nigerian banks. Africa has about 60% unbanked population. Where else would you rather be but in Africa right now?
I agree with you. But I know that the three centerpiece of the AFCFTA has to do with SMEs, women in trade, and young entrepreneurs, whether they are men or women, those in digital economy, whatever they are doing in fashion, in music, entertainment, whatever they are doing. So, and they need your support in the banking sector. Will you be there to provide this support?
Oh, absolutely, absolutely, we will be there. As you rightly said, women, the young population, and the SME are actually form the bulk of attention under the African Continental Free Trade Agreement. And that, if you look at the projection around women, the wage structure of women and unskilled labor is expected to increase by about 10% and 10.5%. Also, around the SME are projected to contribute about 50% of GDP over the next 20 years, and also to be responsible for over 80% of employment. So given that attention is on them, and if you look at it, the major thrust of this agreement is manufacturing. Manufacturing growth offers SME an opportunity for partnership to be at the forefront of the support in terms of value chain to multinationals and other big ticket companies. if they do that, it means that they are able to create better employment that pays better wages. And also in terms of youth population, like I mentioned to you, they occupy about 60% of Africa's population. The digital platform that is available speaks to the needs of these young ones who are essentially under 25. Also, if you look at the African Continental Free Trade Agreement, it's largely premised on trade. Trade without banks is nothing, because trade is premised on international financing, documentation. So as Nigerian banks, what would we offer SMEs? What would we offer young entrepreneurs? We bring to them our ability to finance on a short-term basis, provide them with working capital, finance the import requirement need. Import trade are largely self-liquidating. What that means is that it allows them to finance their trade on credit, if I must use that word, and then the proceeds of sale would help them to liquidate whatever they hold the bank. Also, because a lot of people would then be venturing into new markets, the bank are available to provide, if you were exporting, pre-shipment financing and post-shipment, and also to provide financial advisory or in terms of finding potential buyers, finding potential sellers, understanding the geographic delineation of the market you intend to play, the risk environment, the regulatory framework, and the expectation, help you to interpret whatever agreement you come in contact with. Is always better ab initio to seek financial advice than entering into an arrangement where you don't understand the language, you don't understand the operating environment, and then you run into trouble. Why go through that ordeal if you can leverage the services provided by the Nigerian financial sector? And also, because we've been present in this countries, we understand the requirements of that environment, because we also had to comply even to function as financial service operators. So why reinvent the wheel? Talk to your bankers, talk to credible institutions, and then seek the help that you need and find solution without hurting your business so that you can maximize the benefit of trade.
I know you're speaking for First Bank there. You are in charge of corporate banking and manufacturing, so I expect that when you say speak to your bank, I know you're talking about First Bank. Okay, but when you're speaking for the industry, I understand. That's allowed. It's allowed. At least I can get away with that with my producers. But we'll talk about the side of the banks, because you're ready to fund any bankable business. But then on the side of the government, what do you think, what are your top 3 priorities in terms of, if you say 1, 2, 3, that the government needs to do to support you banks, the SMEs, the women in trade, the young entrepreneurs, as we kick off the new AFCFTA?
Okay, thank you. That's a very important point. For me, in terms of my scale of preference, because bank exists to serve their customers. If the customers are okay and well served, then banks would earn the kind of return they envisage to having. So in terms of importance, I would say the government should focus on an accelerated process that facilitates port access and infrastructure required at our port environment. This is a new arrangement. A lot of people will be looking to Nigeria, given the scale, the size of our economy, the population. Then we will not be able to milk these advantages if we do not have the right infrastructure. And also, the current congestion or bottleneck experience at the port will not help Nigeria's desire for competitiveness or to being recognized for our size and being a hub of Africa trade. Secondly, I will want the regulatory authorities to look at the enablers to ease of doing business. Principally among that will be the power supply mechanism and the cost of generating electricity. If you look at the power supply, because of the incessant disruption to power supply, it has forced a lot of entrepreneurs and other businesses to seek the rather very expensive alternate power sources. This will not help their competitiveness, because if you look at it from the get-go, even before stepping out of their domestic economy, they are already disadvantaged because the exports cannot be priced appropriately. So government would need to look at that. Thirdly, like I mentioned to you, our African Continental Free Trade Agreement will remain in the works, will remain a dream, will remain an aspiration, except Nigerian Regulatory Authority begin to look at our processes to set up the right regulatory environment, legislation that would help us to reduce non-trade barriers, provide the right trade facilitation arrangement so that we can actually be at the forefront of appropriating the benefit from the African Continental Free Trade Agreement. And then security being an important component as well, because security imparts labor liberalization, it imparts ability of labor to move from one part of the country and one part of Africa to the rest. So we have to look at our security architecture and overhaul as may be, or improve so that businesses can thrive and deliver on this important milestone in Africa.
On a final note, for just about 1 minute, since the takeoff on Friday, how much have you guys hit the ground running within the banking industry or financial services industry?
Oh, definitely. So you've seen a lot of banks going into partnership with banks like Afrexim, who have been present outside of Nigeria, the AFC, in order to establish trade portals, to establish a trade facilitation mechanism. As I have mentioned before, Africa comprises of several economies with different languages. You have the Francophone, Anglophone. You have people even speaking Spanish across Africa. So what we are trying to do right now is to bring all of this on board, and then the currency convertibility as well is an important. So if you were in South Africa or you are in Angola and you want to come and trade in Nigeria, how do you do your currency convertibility? So we're partnering with those credible multilateral agency and institution in order to put that mechanism in place. And also, because we for the institution I work for, we have how many years of industry and resilience behind us. We're a dynamic institution. We operate across 6 locations in Africa, in addition to 3 major locations outside of Africa, Asia, the United Kingdom, and Paris. So we're looking at all our architecture. Our clients are everywhere in Africa. They are in Nigeria, they are everywhere. So what we're doing is to follow the trail of their business, to go serve them. And how do we serve them? We essentially deploy our products that have won in Nigeria and deploy them in those locations.
I know. If you're 100 years plus as First Bank, I'm sure you know where the money is and how to make money, to follow the money. Thank you so much, Dr. Bunmi Bajomo.
Thank you.
We wish you all the best. We appreciate your insight and perspectives tonight. Thank you.